Welcome to PwC's R&D Tax Credit Industry Insights Series. Today we'll be discussing the insurance industry. I'm Kendall Fox. With me today is Randy Friedman.
Thanks for having me, Kendall.
Randy, for insurance companies that are developing new technologies, what type of tax incentives are there available to these companies?
Sure. So, Kendall, a lot of the activities relate to software development that we're looking at, and associated with that are the Section 41 research tax credits, similar state tax credits as well. We also have deductibility under 174 and Rev Proc 2000-50. Also, in certain cases, if companies are looking to defer, they also can have the option to do so as well under other tax provisions.
Randy, I understand tax reform makes some changes to the deductibility of these expenditures in future years.
That's right. In 2022, we'll no longer be able to accelerate deductions, and they will have to be deferred. So that's some planning opportunities that companies can take between now and then to make sure that they are accelerating deductions if they feel as though they need to.
And Randy, what type of business issues are insurance companies trying to address by investing in new technologies?
That's great. So overall, throughout the industry, what we're seeing is companies are trying to improve the customer experience. They're trying to improve risk assessment associated with insurance claims, cost-cutting activities. They're looking at expediting the claims process overall. I like to think about that as the sort of the logistics of a transaction and claim through a company. And then also they're trying to use technologies in order to be more proactive in their assessments rather than reactive. And then lastly, as many other industries, cybersecurity as well.
So do you have some specific examples of the type of technologies that they would be investing in to accomplish the above?
Yes, overall, a lot of companies right now, what we're seeing is modernization, overall core legacy systems. That's a synchronization of systems together and a consolidation of older legacy systems that maybe have been built up over time. We're also seeing a lot of mobile applications to enhance the user experience. Also in cases, that's also replacing agents in some ways because it's allowing companies to use technologies, what people used to do. Additionally, we're seeing chatbots, advanced algorithms to be able to enhance customers being able to call centers, otherwise to answer questions related to insurance and things like voice recognition as well. We're also seeing AI and machine learning to overall enhance the overall process for claims assessment, which is pretty exciting for the industry because it's actually reducing costs and allowing them to be a little bit more efficient. And then lastly, again, we're using machine learning and other technologies to detect fraud and also to be able to better assess opportunities as they occur.
So Randy, you'd mentioned earlier that software development expenditures may be expensed now. Tax reform lowers the corporate rate from 35% to 21%.
Yes, it's a great opportunity for companies because what they can do is in 2017, they should be accelerating their deductions to be able to take advantage of that 35% rate before it does drop down to 21%.
So 2017 creates a window of opportunity for taxpayers to review how they've treated these expenditures.
Yeah, we look at it as a rate arbitrage and an opportunity to enhance their deductions right away.
Well, that's great, Randy. And thank you for listening. Please join us next time.